an uptrend may be developing. And we did get that crossover on this big candle right here, October the 10th, and it did move to the upside and made it kind of a nice little run to the upside during October. Coincidentally, this is a time that stocks are making a nice move to the upside, and you find often that the euro and stocks tend to track each other, kind of in a opposite relationship with what the dollar is doing, where the dollar was declining, the euro and stocks were advancing. Now, we can take some clues, the same type of strategy. We can look here and look at some of the clues that we have from the top side. You can see right here, I mentioned this October 27th candle where things really went crazy after an agreement was announced. I think they said at 4 a.m. type of an agreement. At that point, you had a similar type of set of circumstances that were coming around because of what was going on. You had a series of higher highs in the price, but you can look at predicted differences, and you had lower highs. Another example of divergence. I guess when you look at that, you sometimes, well, maybe the price pattern itself is not the most reliable thing that you can look at, but you can look at what is going on underneath the market and kind of compare it with the price. It's kind of one of those indicators that you tie together what is going on in the marketplace. Now, in this case, we also had a situation with, after the kind of the over, I don't know, maybe I should say the irrational exuberance, as Greenspan said, in the euro because of what was expected out of this agreement. But we had a big day up, and then you can see we had what looks like what I would call, and I'm not a candlestick expert, but this looks like a harami candle. A harami is kind of I think, if I'm not mistaken, this is the one that's kind of like the child, where it's inside the body, and you trade the breakout. If it breaks out to the the upside, it's just a continuation type of a pattern. If it breaks out to the downside, it's a potential reversal in trend. And you can see what happened in this particular case, where all the exuberance, all the excitement kind of got flushed out of the market in one day, and then they kind of a, well, I better think about this again type situation, and the traders did. They took it right back down until you had a situation where you really could say that the effective high in this whole area is probably around, more likely to be around 139. These kind of look like outlier type of things, and not such a good indication of where that trend might be. And then you'll also note that as this market was coming back down, that the predicted exponential moving average moved lower earlier, well below the actual moving average, and it made the crossover here to the downside, which started this little downtrend that we have been in, going down to this way. Now, whether we can, endure a downtrend, I guess it's really, it comes down to a question. If we're coming down to the current clues, the current type of a situation, whether, what we can determine as far as what we want to expect for the current situation looking like what it did before. Now, is this a look-alike type of situation? Can we expect that? Or is this kind of a situation that's different? Comes down to, would you like to be long the euro? There are some pros and cons about that when you look at it. You can see that right now, if you are looking at the clues, just looking at the charts, we're not talking about what the Europeans are going to do, the bank's going to do, anybody else, what the Fed's going to do, but you look at the charts, you see that the predicted exponential moving average has started a little wrinkle to the upside, turned to the upside, so that would be favoring a long position. You can see that the Neuro Index is at 1, which suggests that, again, bullish type of conditions. That's in the next couple of days for the typical price, and the predicted differences have turned to the upside. So you put those all together, then it becomes a matter of kind of combining what you know about what's going on in the markets and kind of the fundamentals as you know them. You can't know them all, but as you might know them, do you trust taking a long position considering all the events that are going on in Europe? Did it seem sensible in October, early October, at this point right here, when you were looking at it, did it make sense then to go long? A lot of skepticism, but that's what markets do. They try to keep everybody off balance. You got to respect what the chart is showing you. So if you, just went by the chart, you'd have to say, well, this is the time to be thinking about the potential for a long position. The question is, if you are looking at this from a long standpoint, would you want to be long? Do you want to be long in the situation as it is? Now, on the other hand, when you look at the euro, Could you trust a short position, considering that you have a situation where the central banks were, based on everything that was going on, were likely to get desperate at some point, just as they did back in the crash of 2008, 2009, when TARP and the other programs came in? They had to do something, and so they would probably intervene, or could be expected to intervene, to cause some kind of a euphoria by in the investor sentiment and start a little rally. It's a very emotional market, so you get those kind of changes, those kinds of turns, because of some sudden development, some kind of a maybe not unprecedented, but those kinds of things that you would say are kind of more surprise types of things. You get the surprise of the central bank jumping in the way and the size in which it did. Then you have to offset that by the fact of who will default next, and we don't, or at least I don't really think that all the problems have been resolved in Europe. And so the question here is always one trading off against another, and where do you want to have your positions? Where do you want to be? Now, we kind of know when we look at the charts here. We kind of know, okay, the direction indicated. After a, it's always nice to see after a uptrend you get this downtrend. After a downtrend you get the uptrend. The way markets work, they move up and down. And you want to talk about what is going on. So we're going to add another indicator here to show us a little bit more about what we're going to do in terms of actual entry or exit points. We're going to add vantage points, predicted high and predicted low. It's the gold line, the pink line that you see there. Now, there may be, just look at that blue line there, that predicted moving average, and the black line, for example, for a moment there, to keep that in mind, kind of a visual image, and to see where they're going, and that it is headed down, or has been headed down, and is starting to head up, because we're going to take those out to make it a little bit clearer so we can focus on the predicted highs and the predicted lows as an actual indicator of what is going to happen. And then we're also going to cut down our time frame there, because we got an awful lot of time there, down to 2 months, so we can kind of get a better view of where the market's making the turns and what it's going to do. The predicted high is the gold line that you see across the top. The predicted low is that we'll call it the pink line that you see, or fuchsia as some would prefer, going across the bottoms of, or the lows of the market. And when we look at those conditions, when we look at how we're going to use those conditions, you can see that there are some times when that predicted range, which is what is predicted by the predicted highs and lows, where the stretches, there are some stretches in time where that works out quite well. When you can see right in here, you can see there's a period where it drops to the lows, okay, gets pretty close to the low, right up to the highs, and there will be some stretches in time right here. Very good. There's not a thing you can say that, well, this works every time, because it doesn't always work every time. It's kind of one of the probabilities. You have a stretch there where it looks fairly good. So it's kind of a situation where when you have the market, when it's not offering you a lot of tradable trends, then you want to look at perhaps a